Joining us now to discuss is Lumida CEO and co-founder Ram Ahluwalia. Lumida is an independent investment advisor specializing in digital assets and alternative investments. Welcome, Ram.
Hi, thank you for having me. Pleased to see you.
Good to see you. First, I want to get your take on this whole FTX thing and the CEO's, the new CEO's comments to the Wall Street Journal about potentially restarting everything and getting back to business.
I don't put much expectation around the resumption of FTX operations. It's the kind of comment that you're supposed to make. It's a very diplomatic comment saying we'll explore all options, and of course we'd consider the resumption of FTX. Consider that the lawyers and the other operators have had challenges around the orderly liquidation of some of these tokens, per the public reporting. So, we've also seen that the FTT token has pumped in price based on this reporting, but I'm skeptical that you'll see a resumption of FTX operations anytime soon.
I mean, I'm wondering though, how else are they going to get any capital back? Unfortunately, they've lost so much money that, I mean, you don't see even as a potential of getting back operations as a way for them to make some money for their customers? Or do you think that just the costs of running such an exchange and the lack of volume that we're seeing across the board in crypto relative to where it was, let's say, a year ago, is not enough to drive the sort of transaction revenue that would cover their losses?
Well, the various methods to recover, one of which would be clawbacks, for example. Genesis, which we'll come back to in a moment, had a loan of $2.6 billion to Alameda. And if it was within the 90-day clawback window, that could provide some capital at the expense of creating more pressure, on DCG and Genesis. The appropriate approach here would be to sell off the assets, FTX software, the FTX LLC, the entities, the businesses that perform these operations, to a group of capable operators, right? John Ray is not a crypto exchange CEO. He's a bankruptcy restructuring expert, and he's trying to clear the wreckage and recover value. Resuming operations is a distraction to that endeavor.
Yeah, you brought up Genesis just now, and it looks like Genesis Global Capital might be nearing bankruptcy filing, some sort of workout potentially with its creditors. That's according to multiple published reports. The Wall Street Journal said this could happen within days. DCG owns Genesis, and for now at least, CoinDesk. What's your thoughts?
Yes, well, look, it's encouraging news for Gemini and other creditors to Genesis if there is a successful prepackaged bankruptcy. And I'll come back to that in a moment. Taking a step back, though, it's worth asking, how did we get here? Why didn't DCG simply raise venture capital to fill the hole, which was my initial hypothesis some 45 days ago? And there are a few reasons why. One is there's this intra-company loan of $1.1 billion, the so-called promissory note between DCG and Genesis, and the questions surrounding that. Number two, there's this risk of the clawback of the $2.6 billion that Genesis called in from Alameda in August, which may be in the 90-day window, and that could create another headache for Genesis. And then third, there's an allegation of fraud in Cameron's letter, and specifically an allegation of accounting fraud. So all those factors together have made it seemingly impossible for DCG to raise money at the parent company level, despite having raised significant funding at a $10 billion valuation in November 21. Now, on the prepackaged bankruptcy, here's why this is a very positive development for Gemini if it's the case that this moves forward. One, there are three value sources here. One is speed. So if you go to the court and you say the creditors have agreed, the creditors have consented to this approach, you present that to the judge, then the judge will test for the equitable treatment of the creditors. And if that's passed, you save a lot of legal fees. That's the value proposition number two. You preserve the economic pie. And third, you create clarity. So that creates clarity for how GBTC that's held on the Genesis balance sheet would be treated. Also creates clarity, for example, for CoinDesk and others. And if you step back, there's also a path to a more orderly set of liquidations to make Gemini Earn creditors whole.
Yeah, so there's something I wanted to say about that, and that is, it looks as if they'll end up becoming equity holders, as if potentially the creditors will become equity holders in DCG of some sort, and that's according to what the block is reporting, if that's the case. But the other part, and I sort of want a little bit of clarity for our viewers to understand exactly some of the accusations that initially were made by Gemini regarding what DCG was doing with Genesis and Grayscale, because I think they're sort of laying out the groundwork and what this all could mean. And this also too, I think it also might relate to some of the tweets you had regarding registered and unregistered securities.
Yeah, these are all related topics, and we should come back to the forbearance question as well as the conversion to equity. That latter is another thorny issue. It's also related to unregistered securities. Let me start with the unregistered security idea. So the SEC is alleging that Gemini and Genesis offered to the quote-unquote public, that means retail investors without any testing for suitability, such as a credit investor or whether they're a qualified purchaser or qualified institutional buyer. Those are three different standards of investor qualification. That they offered a security, which was an investment in the form of a loan agreement to invest in Genesis. So, the SEC is saying, look, that's in violation of securities laws, and they're taking some action around it. But how this relates to the DCG equity is the following. You're not supposed to offer retail investors access to private company risky investments without a package of risk factor disclosures, or even at all, unless you go through an appropriate filing framework. The appropriate filing would be what's called an S1 filing. That's the filing that's associated with quote unquote public offerings. We also call those S1 filings IPOs, right? Every IPO has an S1 filing. It's at the SEC. You can look at the risk factor disclosures. You can look at the financial statements and other disclosures such as may lose value. But so if one of the resolutions here was to give DCG equity to retail investors, it's incredibly ironic because we started this problem by offering retail investors access to a security that they were not qualified to invest in. And then the resolution is you're giving them equity that they're not qualified to invest in.
One would presume that it would go potentially to Gemini, for instance, and not to their customers.
Well, Gemini is an agent. Gemini is not a creditor to Genesis. So Gemini is attempting to broker a negotiated settlement between Genesis and the creditor. So Gemini should not obtain any equity. If the Winklevoss twins were creditors, then in that capacity, they could earn equity. So that equity issue is thorny. It is a lever in a prepackaged bankruptcy. Here are the primary levers. One is you say, hey, Genesis, pay us X cents on the dollar today. Maybe that's 30 or 40 cents, whatever you can pay out of pocket today. Second is pay us over time, and we'll come back to forbearance. And the third is convert debt to equity. That last one is a good lever to have. It does de-lever the balance sheet of Genesis. Again, they've got $3 billion outstanding has been reported, and it makes it easier to make people whole by giving them equity. But again, you have retail investors are not qualified to invest in this loan agreement, much less own equity in DCG. And if you think, does Barry Silver want to offer equity to these irate retail investors? Does he want to be held accountable to them? And he's not going to be able to get them off their cap table unless he gets liquidity. And so I'm a little skeptical about that. We'll have to really take a close look when ultimately the term sheet from this prepackaged bankruptcy is made available to the public.
Well, Ram, I mean, this I think you and I and anybody else is going to take at least a couple of hours of discussion. Unfortunately, we don't have enough time. But thank you again. I think we'll have you back. Definitely put some more light into this because it'll be fun, and God knows who will own CoinDesk by then. But thank you very much, Lumida CEO and co-founder Ram Ahluwalia.